Most of us don't understand the way the economic machine works, and most agents don't. The Fed funds rate going down, that's not going to affect interest rates at all. They've lowered the Fed funds rate 4 or 5 times in the last 18 months. What's happened to interest rates? Nothing. People that you pay thousands of dollars to sit in their conferences are like, watch out, rates are coming down to 5% this year. The last time interest rates were this high, they stayed that high for a decade.
We got a random one before somebody jumps in,
Yeah,
question-wise. Given the market conditions, do you and I'm in the greater Boston area, I think we've met up there, but expireds have kind of in the last few years not been a thing, and they're obviously starting to become more of a thing.
Sure.
Do you feel that's like a continuing trend? Like, do you think we'll see more in 2026?
Yeah, for sure. And the reason is because from a macro kind of standpoint, we have, if you understand like the economic machine, then you can also understand what really contributes to demand, which is interest rates. And we've had 3 years of interest rates being double what they were, 3 years ago. And what I find super interesting, Derek, and this is for everybody on this call, I think even though we live in, the capitalist central of the world, most of us don't, even if we are real estate agents, and even if we are educated, you know what I'm saying? Like we went to college, whatever. Like most of us don't understand the way the economic machine works. And most agents don't. Because I'm watching all these agents post about the Fed funds rate going down as though that actually has anything to do with mortgage rates. And they don't actually understand the way that the system actually functions. So I'll give you a brief explanation. It'll be long-winded, but now you'll actually understand why. And you'll be able to convey it with confidence, not only because environment dictates strategy. So first I got to get clear on what the environment is, but then it'll also help you to convey with conviction when you're having conversations around price with sellers, right? So the way that the economic machine works is we borrow money to fund this glorious experiment, right? Called the United States. We don't pay for it with taxes, okay? And the way that we borrow money is we issue bonds, right? I'm sure you've heard of a bond before, and that's what we do. We issue bonds, right? And for the first time in 2025, about 4 months ago, for the first time in 100 years, something happened, which is that the United States credit rating was lowered. Okay. So if mine and your credit rating goes down and I'm trying to borrow money, what happens to the interest that I have to pay? Goes up. So if we're borrowing money and we're issuing bonds, that means we have to pay a higher interest rate to the person lending us the money. Yes? Because now we're more risky. Does that make sense? Okay. Well, that ends up affecting the 10-year Treasury note. And the 10-year Treasury note is what actually affects interest rates for mortgages. So I don't know if you guys have noticed, they've lowered the Fed funds rate 4 or 5 times in the last 18 months. What's happened to interest rates? Nothing. For mortgages, they haven't changed at all. Okay? So I believe, with a super high degree of probability and certainty, that we will continue to have 6+% interest rates for the next 12, 18, 24. They're not going to change anytime soon. And that's the main driver of demand. Okay? That's the reason why we went from 6.5 million transactions to 3.9, and that's persisted for 3 years in a row. The last time interest rates were this high, they stayed that high for a decade. Right? So we're only 3 years into it. So, okay, so that's context. We're also seeing across the country that inventory is rising, right? So when you have inventory rising and demand either staying the same or softening because of the cost of money, A, what happens to prices? They come down. And B, what happens to expired listings? They go up. Does that make sense? So the whole reason of me walking you through that is so that way you logically understand, right, the answer. Not just me saying yes, they're going to go up, because that will inform not only your strategy as an agent, but it will also inform conversations that you have with homeowners, because they don't know either. I literally had to say to a coaching client of mine, she has 30 million in volume, okay? She posted about the Fed funds rate coming down. I said, what are you doing? She's like, what do you mean? I'm like, that's not going to affect interest rates at all. You don't know the way the whole economic machine works. I said, I want you to take a screenshot of this conversation and come back in a year, and I promise you rates will still be where they're at right now. She didn't even know. She has 30 million volume. She has no idea. And that's most of us. You know what I'm saying? Most of us have no clue, right? So, but now you do. And now you can have those conversations. So when a seller says, well, I think the marketplace is going to get better. It's like, well, I go to bed every night hoping and wishing and praying that that's the case. At the same time, I find that if we look at data, that helps us to give us context. And then we can see kind of make directional bets, right? Because nobody has a crystal ball, myself included, and anybody who tells you that they do, they're lying to you, and you should probably run in the opposite direction. At the same time, I believe that when we look at some of this information, we'll be able to see directionally where it's going, and that'll inform our decisions about, pricing and how you wish to proceed with things. Does that make sense? Go over local market stats, how inventory is rising and demand staying the same and softening. Like, okay, and then you're like, all right, so you strike me to be someone who's pretty reasonable and can recognize patterns. Having looked at this information, does it seem like a realistic expectation in the next, I don't know, 30, 60, 90, 120 days that you'll be able to get substantially more money for this property? Probably not. Okay, and I'm in agreement with you. So being that that's the case, you have a decision to make, and whatever you decide is totally fine. A, take the home off the market and you don't sell it. And you wait. And realistically, having looked at this data, that may be years before you can sell it again at a price you felt more comfortable with. B, you rent it. And I know you indicated to me that that's not a serious consideration or option. Or C, you sell it, and in doing so, we'll have to position the property competitively to ensure that, you're one of the X amount that sell in the next 30, 60, 90 days when the competition has increased because inventory's gone up dramatically. So based on what you're looking to accomplish and why, based on what you value most and what's important to you at this stage in your life, what do you think we should do? Do you see how this skill, bro, is I want everybody on this call, our tendency is to only focus on setting appointments. That's the only skill we focus on. Do you realize that? This skill in this environment that's not going to change anytime soon. It's not. Bro, all the gurus, watch out, January, watch out. Right? Bro, I have receipts, okay? I did a post at the beginning of this year. I'm like, you guys are making me laugh, bro. None of you guys understand the way the economic machine works. Like gurus, people that you pay thousands of dollars to sit in their conferences are like, watch out, rates are coming down to 5% this year. Everything's going back, right? Like legit, bro. And I did a post. I'm like, well, that's actually not what's going to happen. And I explained, and here we are. Whole year went by. What have rates done? Stayed the same. But this skill, so in this environment, and I don't think it's going to change anytime soon, 12, 18 months. So 24 months. So in this environment, bro, the skill of, setting appointments are important. But that skill that I just ran through you about helping people to self-discover, being able to frame conversations with data and statistics, being able to have high-level conversations with people about the way real estate markets work and the way the economic machine works, having to walk them through making a difficult decision where they're not getting what they want. Because let me ask you a question. When children don't get what they want, what do, Derek? They throw a temper tantrum, right? What do adults do when they don't get what they want? Same deal. They throw a temper tantrum. So we have to skill up and level up. There's no way around it. You don't get more because you want more. You get more because you become more.